Okay, shh. Let's begin our today's class. Okay, let's begin. Okay, so for today's class, right, what we are going to learn is basically about ratio. Okay, ratio analysis. So for this topic itself, what is important is this topic is useful for your assignment purposes. Okay, usually you use this for assignment only, and I feel that the ratios that you learn will be quite helpful. Okay, so today we learn about ratio analysis. Okay, so first of all, right, before we look into today's contents, so for today's contents, we are going to look into three main things: ratio analysis, DuPont identity, which is one formula, and some formulas on internal growth rate. So there are only three main things you need to focus on for today's session. Okay, now before we look into the first ratio, okay, just a quick recap on what we had learned so far. Okay, so previously, okay, in previous sessions, in the previous first and second tutorial, there are few concepts that we have learned so far, or few formula. Okay, like for example, first of all, we learned about the sources of finance, right? So they are two ways for a business to raise finance. Okay, when we talk about the source of financing, the source of finance, we have two methods. One is what we call as the debt financing. Okay, when we talk about debt financing, means you use the loans or bonds, okay, loans or bonds to raise the finance. And second way to raise finance is through equity financing, right? So these are what we had learned previously. Okay, so equity financing means you raise the money through the issue of the new shares. Okay, so this is the first concept we learned so far. And previously we also learned about working capital. So if you remember what is working capital means the money that you need to pay for your day-to-day expenses. So therefore, there's a one simple formula, which is to use current assets minus current liabilities to see how much of the liquidity do we have in order to pay for our day-to-day running business. Okay. And in the tutorial number 2, we had also learned about the simple balance sheet. Okay, so we learned that assets is always equals to the liabilities plus equity. Okay, we are going to use all these simple formulas again for today's session. Okay, and the last one, okay, the last one is that we learned that from the income statement. Okay, once there is a net income being generated, okay, there are two ways for the net income to be used. One is to use it to pay for the dividends for the shareholders as a form of returns, or another way to use our net income is basically to pump it back to the business, addition to the retained earnings, in order to pump it back to the business. So these are the four things I want to highlight first before I look into today's contents. Why is that so? Because later when you start to do your tutorial questions, you will see that these formulas will be very helpful for you. Oh yeah, it's not clear to see on the projector, so I have to see from there. I think usually need to switch off the front light, then only people can see. Okay, can All right, so let's have a look into our today's contents. Okay, so first of all, a few ratios we are going to look into. So what I'm going to do right now for tutorial's recap is that I will go through with you the formulas, and I want you to know at least what is the formula for. Okay, so please download this slide. This slide will be very helpful for you. Okay, for your assignment purposes. It's already uploaded on Teams. Okay, so first of all, we look into liquidity ratio. So when we talk about liquidity, we are looking into your ability, okay, the firm's ability to pay the short-term debts. Short-term debts is your current liabilities. Okay, so this is your current liabilities. how much liquidity do you have to pay your current liabilities? So we have three ratios over here. First one is current ratio. Current ratio, we look into how much current asset do you have to pay for your current liabilities. So we use current asset divided by current liabilities. Okay. So for example, if you get the answer of 2, that means what? That means that you have a current assets of current assets that's worth 2 million, okay, to pay for the 1 million of current liabilities. Okay, so that means that you have 2 million worth of the current asset to pay 1 million of current liabilities, which is okay, which is good. Okay, now we wouldn't want the current ratio to be too high or too low. Okay, so for example, when current ratio is too low means what? Means maybe you do not have enough current assets, do not have enough liquidity to pay for your short-term debts. Okay. Vice versa, we do not want current ratio to be very high as well, like more than 3, 4 and onwards. Why? Because if the current ratio no chair already. Yeah. You can see that. Okay, but this chair I think macam not so stable. Okay, so if let's say if your current ratio is too large, okay, that is not good as well. Why? Because when current ratio is too high, that means that you have too much money being tied on inventory. That means you did not utilize all the funds or cash efficiently enough. So that's not good as well. So 1.5 to 2, 2 is good. Okay, 2 is good usually. That depends on the competitor analysis as well. You have to look into what is the normal current ratio among the competitors in the industry as well. Okay, the next one is quick ratio. Now, quick ratio here is also called acid test ratio. So if you want to write it down, also can. A bit hard for me to write down. So no worries. Quick ratio means acid test ratio. That means here I want to see more of its liquidity. It's a more of extreme version as compared to current ratio. So therefore, we will look into current ratio, right? We look into all the current assets. But current assets includes inventory. Inventory is not liquid enough because you need to sell first, then you get the money now. Okay, so it's still not considered very liquid enough. For quick ratio or acid test ratio, I really want to see the true liquidity itself. Okay, so I want to deduct the inventory because inventory is not liquid enough. So therefore, I have to minus the inventory. Okay, and then compare with the current liabilities. Again, when you look into this one, 1.5 to 2 is always considered as good. Okay, you do not want it to be too high or too low. If too low, that means you don't have a very good liquidity, and if it's too high, that means that you still have a lot of cash that that can be utilized. Okay, then the third one is cash ratio. Cash ratio, you just want to see that how much cash do you have to pay for your current liabilities. So I use cash divided by current liabilities. So the first part here about liquidity ratio is quite direct, not too difficult. Yeah. In which I feel that liquidity ratio is the one that you're going to use for your assignments, especially the first two. Okay. Now, moving on to the second part, okay, it's called financial leverage ratio. When we talk about financial leverage ratio means that leverage means you are borrowing money, you rely on loans, okay? So therefore, basically, we are referring to how the firms use debt capital. Debt capital means that debt financing, borrow money, okay, to finance assets. So that's why we call leverage. Leverage means you rely on loans to fund your assets, to fund your business, okay? So there are 5 formulas over here. Focus on the first 3, but I will still go through with you so that at least you know what each formula means. Yeah. So the first one is called total debt ratio. Okay. So total debt ratio, basically you use total debts divided by total debts plus total equity, or you can use another method, total assets minus total equity divided by total assets. Basically, when I say total debt ratio means that how much total debts do you have as a proportion of the total assets. You are just comparing between total debts and total asset. Now, why is that the formula like this? So because you see the numerator part over here, okay, remember the formula, assets equals to liabilities plus equity. So therefore, today, if I were to find debt is liability, okay, debt is liability. So how do I get liability? Liability equals to asset minus equity. So this is why you use total assets minus total equity. Okay, so basically the upper part is referring to total debts. Or alternatively, why is that here total debts plus total equity here? Because this is liability plus equity, which equals to the total asset. It's the same thing. I'm just playing around with the words. Okay. The next one is debt equity ratio. Okay. Debt equity ratio, as the word suggests, I'm referring to the proportion of the total debt as a proportion of total equity. Okay, how much total debt that's been used as compared to the total equity that has been raised. So I'm the comparison between these two components, which are liabilities and equity. Total debt as a proportion of total equity. Okay. Now the next one is equity multiplier. Okay, so equity multiplier, basically I look into the total asset as a proportion of total equity. Okay, so therefore here basically it says that the higher the debt, that means the more debt you use, that means that there will be lower the total equity. Okay, so there will be a high equity multiplier. Okay, so that means today if you fund your business, okay, with the use of debt financing, that means if you use a lot of loans or bonds, right, that means you will not rely too much on equity, not so much on equity financing. So the total equity here, okay, as a denominator will fall. So when the denominator will fall, the overall answers will increase. Fair enough, because it's a fraction. When the denominator, which is total equity, falls, the overall number of equity multiplier will increase. So therefore here it says that when you use more of the debts and use less of equity, what happens is the equity multiplier will be very high. Okay, that means what? That means you use a lot in debts, oh? Okay, that means you use a lot of debts. So when you use a lot of debts, means that your equity multiplier will be high. Okay, a high equity multiplier means that you use a lot of debt. Okay, for equity multiplier, you can actually use this formula as well. 1 plus debt equity ratio. Why? Because when you use 1 plus debt equity ratio, is basically total debt divided by total equity, right? So I can write as total equity plus total debt equal as a proportion of total equity. Okay, and therefore equity plus debt, that means liability, that means equity plus liability, that equals to your total assets as a proportion of total equity. Ta-da! It's the same formula. Okay. Okay, the next two I will go through roughly with you because that's not too important. Okay, so the next two, time interest earn ratio, is just want to see that how much of the earning before interest and tax, okay, that I earn, okay, to be able to pay for my interest payments. Okay, so it's a measure of a company's ability to meet its debt obligations based on current income. So based on the income that I earn, earning before interest and tax, okay, am I able to pay for the interest payments? So I'm looking into the current income that I earn, okay, and my debt obligations. And cash coverage ratio, that means I want to look into the existing cash that I have, so I add it back with depreciation. Why is that I add that? Why is that I adding back depreciation? Because depreciation is a non-monetary expense. It is a expense, but the thing is it does not incur cash. So therefore I can add it back because that's still my cash to pay for my business. Okay, these two not important, huh? You can skip the last two. Okay, moving on to the next one, asset management ratios. So asset, okay, so we are talking about how efficiently the firms use the assets to generate sales revenue and profits. First of all, let's have a look into day sales in receivables. When we talk about day sales in receivable, means what? Means that I want to look into the average number of days it takes a business to collect payments following a sale. Okay, so therefore, sorry, I think I skipped one page already. Sorry, it's this page first. I bet. Okay, so back to here again. Here we look into how the firm's assets using how the firms use the assets to generate sales revenue and profits. So the first one is inventory turnover first. Yeah, sorry. So inventory turnover means that I want to see how many times, okay, look into it that times, how many times a company has sold and replaced the inventory during a period. So therefore, here, if your inventory turnover is very high, means what? Means that it's very fast for you to actually sell out your inventories. The inventory come to your storage and then you sell out very fast. Okay, so the higher the ratio, the lower the capital used in holding inventories. Why? Because you see, on my denominator over here is inventory. So if let's say I do not have so much stocks being kept in my inventory, this inventory value will fall. When the value of the denominator falls, right, what happened is overall this will increase. That means what? That means the goods and services, the stock are not being kept in inventory too long. So therefore, my inventory value will fall, which is my denominator will fall. Okay, therefore it causes the entire number to be up. So that means what? That means it's very fast. The number of times for this inventory turnover is fast. That means the stock coming, I'm able to sell out very fast. In, out very fast, which is good. Why? Because I don't have to keep so much in my storage. Okay, so that's one thing. But inventory turnover is only looking into the times, not days yet. Because here I can only see how many times, how fast is it in 1 month, how many times is it being turned over. But it's not about the days. I want to convert into days. I want to see on average how many days do I use to actually clear off the inventory, to sell off the stocks. Then I have to convert this in times, okay, into days. Okay, so therefore, if I were to convert it into the days sales in inventory, I have to use 365 days divided by the answer that I got just now, which is inventory turnover. Then only I get the average number of days it takes for a firm to sell off the inventory. Remember, we first got the times first and then convert it to day sales. Okay? Same thing later on when you look into receivable and payables as well. So for example, when we look into receivable turnover, okay, first of all, this is basically the number of times, okay, that a company collects is account receivable, the people who owe money with you, okay. So same thing, if today you keep collecting the money from the people who owe you money, so your account receivable will be falling down, correct or not? Your denominator will be falling down. So therefore, when denominator goes down, what happens is the entire value will go up. So receivable turnover will become higher. That means what? That means it's very often for you to go and find the people who owe you money and collect the money from you. So the turnover is very fast. That means in 1 month you do a lot of times. Okay, but again, this is about the number of times, not about the days, because usually when you want to do interpretation, it will be more useful for you to convert it into days. Okay, so therefore the same thing, if I were to convert into days later on, I will use 365 days to divide by these answers. I will show you the formula in a while. Similarly, if I want to look into payables turnover, okay, that means that I want to look into how many times in a month, for example, that I pay back to my suppliers when I buy the goods and services on credit. Okay, so therefore, this one, we look into the average number of times, okay, a company pay its creditors. Okay, same thing, if I pay my creditors very often, this thing will fall and this thing will go up. But again, this is about number of times only. So I want to convert into days because this is about turnover only. Okay, so therefore this leads me to the next slides over here. I want to convert everything into days. Sorry. Okay, so I use 365 days divided by receivable turnover to see the average number of days that I use to collect the payments back. Similarly, for payables as well, I use 365 days to divide by payables turnover to see the average number of days that I use to pay for my bills. Okay, so these two are the continuous version of the previous two formula. And next one, total asset turnover. Total asset turnover means that how good I'm using my assets in generating sales. So it's about asset utilization. Okay, and capital intensity is the balik, the opposite of the total asset turnover. I put total asset as the numerator and the sales as the denominator. Why? Because I want to see how many assets are needed to produce $1 of sales. Total asset will be important, so at least you can focus on that. Okay. Now, the next one, yeah, this is easy. It's about profitability ratio to see how successful business has been using has been at earning profits okay, using from sales or capital employed, from the assets employed, okay, or from the equity. So therefore, we have three ratios over here. The first one is profit margin. Profit margins basically sees that how much net income is being earned for each dollar of sales. Okay, it looks into our profitability. ROA basically looks into how much net income is being generated from the total assets that we have. Okay, how well I use my total assets in generating net income. Okay, ROE means, again, we look into how much of the net income is being generated from the investments from the shareholders, okay, from the total equity. So you can see when we talk about profitability ratio, my numerator is almost the same. It's always about net income, net income, net income. But it depends on which one that I compare to. If profit margin, I use sales. If ROA, I use total assets. If ROE, I use equity. So that's basically to see how good the business is using total assets and total equity in raising, in achieving net income, in earning net income. Okay, the next one here is market value ratios. Okay, first one here is PE ratio. PE ratio, I feel that it's quite important because this one not only you'll be using it for assignment, you will be using it for your real life purposes as well. When you start investing, I feel that most of the time PE ratio is something that you will look into. So PE ratio looks into price per share. Now remember, when I say price per share means that the current share price per share, okay, usually it is directly being given in the question, okay, it basically means the current share price. There is a formula also, this is the formula, but basically price per share means current share price. That means now you go to stock market and you see the share price of the company, that's price per share. Okay, and we use price per share divided by earning per share, EPS. But how do you calculate EPS? You use net income, okay, divided by total shares. Okay, so that means that how the business, okay, generate the net income from the total shares that's being raised. Okay, earning per share. Okay, so therefore what P ratio is trying to tell us actually, you see the upper part price per share is the current share price, the bottom one is earning per share. That means the net income that's being generated from the shares that's being pumped in by the investors. So that means we look into the investors confidence actually, because on the numerator is price per share, current share price. Current share price are being influenced largely by the shareholders. You know, like for example, when a lot of people wanted to buy the share, you will push up the share price. Okay, so therefore the upper part is about the investor confidence. You know, like if the confidence is very good for the company, the price per share will go up a lot. If not, it's very low. So therefore, price per share is like, for example, how much, okay, how much investors are willing to pay for every $1 of earning from the business. Because earning per share means what? Earning per share, as I told you, is net income divided by total shares. Okay, so therefore here, price per share as a proportion of earning per share means that how much that the investor is willing to pay for $1 of the income that's being earned. Okay, so that's why called as PE ratio. So this is why we said that when PE ratio is too high, right, there's a risk. The risk is that maybe the business is being overvalued. Okay, so when P ratio is high, if it goes up entirely by the price per share, current share price, the numerator goes up. Okay, so what happened is this whole thing will go up. That means that the business might be being overvalued already. Okay, so there's a risk about P ratio. Now, same thing, when you look into P ratio, you cannot just see from the company itself. You need to do competitor analysis. Like for example, in the industry, there are so many different firms, right? Okay, you look into their P ratio to see that what is the average P ratio in the industry. Now, let's say you look into in the industry, there's one, let's say, market leader. The firm is the most famous one. Okay, but the P ratio is not as high as the others yet. That maybe can show that that could be a possibility for you to enter. That means that there's a good opportunity, okay, of the firms that you can invest in. But usually it's very hard to have this kind of situation exist. Why? Because if a company is famous, right, usually the P ratio will be high already. Why? Because people are expecting to people are actually willing to pay more in terms of higher price per share in order to invest in the company, because if it's famous, if it's the market leader, then chances are they feel that they have the potential. Okay, so therefore P ratio may be high usually for for famous firms, for reputable firms. So for example, let's have a look into this example here on the right hand side. Okay, let's look into some food producers in Bursa, Malaysia over here. Okay, you can see, okay, first of all, this we are looking into all the food producers here. Overall, if you see their P ratio, okay, is about 20, around 20 plus minus P ratio. Okay, you see, but there are some outliers. Okay, so among all these, right, you see Nestle is quite famous. You see how much is the share price? Price per share. Price per share is this one. You see, price per share for Nestle is 135.20. That means every one unit is really 135. But in Malaysia, when you buy one lot, it's 100 units. So that means when you buy one lot of Nestle, you already pay how much? 13,520. Because one lot is equals 100 units when you buy the share price, buy the shares. Okay, so you can see Nestle is a reputable company. Makes sense. It does have a very high PE ratio as compared to the rest, right? And yeah, indeed, when you talk about Nestle, last time when I was a student, when I start trading, when I was in degree year 2, yeah, Nestle was in that time in 2017. Nestle was around 60 something only. On that time, also feel that it's quite expensive already, but it went up actually. Yeah. So, but among all, right, do you realize that one of the company here could be being overvalued already? You see this Farm Fresh, FFB. Farm Fresh, their P ratio is 54 times, man, which is almost similar with Nestle. But how much is the share price? 1.64 only. It's almost like a penny stock, but the P ratio is so high. So this one most likely is being boosted by what? By the investors' confidence. Okay, maybe because of some factors, like for example, earlier Farm Fresh say that they bought over the ice cream, the Inside Scoop. Okay, but the thing is that's not a very attractive news as well, because nowadays ice cream, there are a lot of competitors as well. Yeah, but you can see here, if you look into P ratio, you can roughly see which company is being overvalued. When you see that a very small firm, not small firm as in like you can see, we judge from the share price, okay, is so little, 1.64 only, but the P ratio is so high as even compared to what, to F&N and Dutch Lady. Okay, something to take note here. Okay, so back to our contents. Okay, so we have done with the P ratio. The next one is price sales ratio. This one not too important. Basically, I'm just looking into the comparison between price per share and sales per share. Okay, price sales ratio. So that's why I look to price per share and sales per share. Okay, to compare business stock price to its revenue from sales. Okay, because price per share is current share price, okay, current share price as a proportion of the sales revenue. Okay, market to book ratio. So again, market to book ratio. That means I look into market value per share. Now remember, market value per share is also another word for price per share. Okay, as a proportion of book value per share. So how do you calculate book value per share? This is the formula. Okay, but what is this formula for? Here, basically, I look into market value per share. That means the current share price as a proportion of book value per share. Book value per share means the amount that's being left when your company want to liquidate all the assets and pay all the liabilities. So that's the book value, the value that you get when the companies liquidate everything. Okay, so you do comparison between the market value of the shares, okay, the current share price, and the book value per share, the amount that the business will get when they liquidate everything. Okay, that's called market to book ratio. Okay, and the last one, EBITDA ratio, basically just look into the comparison between enterprise value as a proportion of EBITDA. Okay, to see how much is the company's value as compared to its earning before interest, tax, depreciation, and amortization. Okay, but that one is not important. For this one, you focus on the first three will be enough. Okay, now moving on to the next one. DuPont identity. This formula will be more important. You may want to use it in your midterms. Okay, so DuPont here, okay, is basically it's a theory or it's a formula that breaks the ROE into three components. Why? The purpose is to give us more information. How is that so? Remember what is the formula for ROE that we learned just now? ROE is a profitability ratio. We use net income divided by total equity. Okay, but it doesn't tell us a lot of information here unless we use DuPont identity. Why? Because I can expand this formula to this one, net income on the that means that I can expand this ROE into three components. Okay, so I can rewrite into net income divided by sales times sales divided by assets times assets divided by equity. So you can see my numerator here is from the numerator here, and my denominator here is from the denominator here. Okay, so we have three components over here, and each of these three components will tell us some information. For example, okay, let's see. Okay, when you look into net income divided by sales, okay, net income divided by sales here, what ratio is this? Net income from sales is profit margin, the first profitability ratio that we looked into just now. Okay, so therefore, the first one tells us about profit margin to measure the firm's operating efficiency and how well it controls the cost. Okay, to measure the profitability. Second, when you look into the second component, sales divided by assets. Okay, sales divided by assets. That means that how well you use the assets to generate sales is total asset turnover. Okay, lastly, we look into assets divided by equity. Remember what formula is this? We just covered in the second part just now about the financial leverage is equity multiplier. Okay, how much total assets, okay, are being funded by total equity, for instance. Okay, so therefore, when you have these three components, you can cut it. You see, sales and sales, you can cut it, asset and asset cut it. Then at the end, you still get net income divided by equity, which is the ROE. Okay, so that's how the DuPont's formula being derived. But the thing is, what is important is DuPont identity trying to say that it breaks ROE into three parts in which you can look into it in which it can provide better information for you. And in fact, when you look into the first two here, okay, when you look into the first two, okay, net income divided by sales times sales divided by assets. If I cut both sales here, you only have net income and assets. Net income as a proportion of assets is what? So net income divided by assets. That means how well you generate net income from your assets is ROA, return on assets. Okay, so the first two here, it gives me ROA as well. So how many information you have here? A lot. You have three information here about profit margin, total asset turnover, and equity multiplier. And when you look into the first two, it gives me ROA as well. Okay, that's about DuPont identity. Okay, we're good. Now let's move on to the last part here to understand what is internal growth rate. But before that, let's have a look into retention ratio. Okay, we had just learned that once, in the previous class, we learned that once the business has net income, what happened is a portion of the money can be used as dividends, and another portion of money can be used to as an addition to the retained earnings. Okay, now, first of all, we can say that retention ratio equals to B. Retention ratio means the amount of money that's being left to pump in back to the business is called B. Okay, so if I were to look into the money that's being paid out in terms of dividends, I just use 1 minus B. Okay, dividend payout ratio, 1 minus B. Why is that so? Because this follows the formula that I told you just now. Net income, okay, can be used for two purposes: dividends and addition to retained earnings. Okay, so addition to retained earning is B lah, okay, because that's what we call as being retained in the business. Okay, so if I were to find out how much is being paid out, I just use 1 minus B, okay, to get the dividends payout ratio. Okay, how the formula is being derived here? Okay, so first of all, you see here, dividend payout ratio, okay, equals to dividend per share divided by earning per share. So I can write here, okay, dividend payout ratio, okay, equals to dividend per share divided by earning per share. So first of all, what is the formula for dividend per share? Total dividends divided by total share, okay, as a proportion of earning per share. How do you calculate earning per share? You use net income divided by total shares. Okay, so what happened is now you can move around total dividends divided total shares times the balik total shares portion of net income. Okay, and then you cut. Therefore, it becomes total dividends as a proportion of net income. Okay, which is here. Okay, which is cash dividends as a proportion of net income. Okay, total dividends divided by net income. Okay, and this one I just show you how the formula is being derived. Not very important actually, as long as you understand how the formula is being derived, that's good enough. They won't ask you to derive the formula in the exam anyway. Okay, next one, retention ratio, okay, is B, okay, the money that is being kept in the business to pump it back to the business. Okay, so the formula here, okay, so again, talk about retention ratio, B, okay, it can be rewrite into earning per share minus dividend per share, okay, divided by earning per share, right? Okay, so I can rewrite it. Okay, earning per share. Earning per share means net income. It's a proportion of total shares. Okay, dividend per share is total dividends or dividends, straight away dividends divided by total shares. So I can put it together on my numerator as a proportion of uh net exchange rate, right? Then net income divided by total shares. Okay, then I can put the balik. So I can change here. Okay, straight right. Total shares times divided by net income. Okay, so total share cut out. So at the end, net income minus dividend is what? Retained earnings law. Retained earnings. Retain earnings as a proportion of net income, which is the formula for this one. Okay. Okay, what you need to focus on is the right hand side, this one. Okay, the internal growth rate. So that means that now you use your retained earnings to fund your assets. Retained earnings is a B. Okay, so you use the retained earnings to fund your assets. Okay, that's basically what we call as internal source of finance, internal growth rate. So B is your retained earnings. Okay, you put into this formula. Okay, see when let's say now, okay, when let's say this B here getting larger, more and more money, okay, being pumped in to the business to fund your assets. What happened is you look into the last one over here. When B becomes larger, this whole thing here will become larger or smaller. The denominator side will become larger or smaller. Smaller, right? Okay, this becomes smaller, and therefore my numerator gets larger and denominator gets smaller. So what will happen to the overall numbers? Becomes larger. Yeah. So that means that the higher the retained earnings, the higher the retained ratio, the higher the internal growth rate. Okay, so therefore this is one of the conclusion you can derive. The higher the retention ratio, the higher the internal growth rate. The more you pump back to the business to fund your assets, the more of the internal growth rate. Okay, so that's all you need to know for your tutorial topic 3.
德库门人，他上过儿的，
哦，
三个线上过，我不管电话来，
哎呀，
他并且他找我吃饭，
哦，你是什么 course accounting？怪不得上个上补过啦。
热呀，
啊，
我很热呀，
热
一进来就看到这样多一下，我不热，不是我不热，
哦，blur，OK。
我不是，
Okay, let's have a look into tutorial questions. Okay, first question, DuPont identity. Why is the DuPont identity a valuable tool for analyzing the performance of a firm? Okay, it is valuable because it can look into 3 components here: firm's profitability, asset utilization efficiency, and financial leverage. I have highlighted for you. Okay, discuss the types of information it reveals as compared to ROE considered by itself. Because if you look into ROE, the ROE can be very high, that means it seems good, right? When ROE is high, that means you generate a very good returns based on the total equity. Yes, it shows that it's a very good position. But the thing is this, it may be misleading, okay, if let's say we do not look into its profitability margin as well as the financial leverage, okay. So therefore, that's the answers for the first question. Okay, let's have a look into calculation questions. First question, um, Clarkson GMB hash has net working capital of 1,110, current liabilities of 5,810, and inventory of 1,245. What is the current ratio and what is the quick ratio? First of all, to calculate current ratio, what formulas do you need? Current asset divided by current liabilities. But you have current asset here, man? Don't have. So how? You have to use the formula that I told you in the beginning of the class. The working capital. Okay? So you have your net working capital. Okay? You have your current liabilities. So you can calculate your current assets already. So working capital equals to current asset minus current liabilities. You already have the net working capital and current liabilities. You can calculate current assets. Once you have current assets, then you can calculate your current ratio using this formula. Okay, and after that you can use the same current asset minus the inventory out. Okay, and then divided by current liabilities to calculate the quick ratio. So the first one is quite direct. So the only part here that's important is to remember how to calculate working capital. Current asset minus current liability. Okay, let's move on to the next question. Okay, next question is to calculate profitability ratio. Wow, 我好像有听到你在讲，我好像有听到。人帅就是这样咯，哎呀，颜值高嘛，能怎样哦？Okay, Here and Gone Incorporated has sales of 18 million, total assets of 14 million, and total debt of 3.8 million. If the profit margin is 8%, what is net income? What is ROA and what is ROE? So this one you refer to the profitability ratio, then you can calculate everything already, right? Wow, the slide so useful already. Okay, so first of all, you see, you are being given profit margin, but you want to calculate net income, but you have the information. So you see, profit margin equals to net income divided by sales. You got the profit margin and the sales already. Okay, the percentage you convert into decimals. Okay, as long as you do not convert wrongly. Okay, so therefore, you move around and at the end, you get your net income. Okay, and how to calculate ROA and ROE? Very simple, use the formula. ROA equals to net income divided by total assets. Okay, net income, you already have it from your first part, and then divided by total assets that you got from the questions. Okay, and what about ROE? Here, there's one problem, no total equity. So since there's no total equity, how do you do? What's the formula for equity? Total asset minus total debts, right? So here, this part is to calculate total equity. Okay, so ROE equals to net income divided by total equity. So basically, we are just playing the formula only.
哦，也有啊，其实是电脑，跟他声音，啊，哎，学校啊，喂，哦，哎呀，这个题目我相当于再来个还有课嘞，对啦，我们是公平比上去，来那个今天要买一只菜，看上来，我妈的，花了，那个人波传，我有300块一个枣，哇，你如果现在是上海，一个枣，吃菜饱做，
什么？
吃菜饱
哦，你叫你放就叫那个百年生，
哦，你不知道啊？
叫谁来懂？
所以你不知道我有教 Intro to Finance，
对啊，
but
三个 set
有，然后上个是4个班呢，
第一个 set 可以选的，
不能选第一个。不用啊，你是有很好吗？不行啊，什么水饺？
忘记了这个选我是对啊，根据什么？
哦，我知道，我知道。
越南可能算好，
OK，喂，Let's continue。热闹哦，
就
喂，Let's continue。Okay, this one, the next one, calculate average collection period. Sonia Art Spa has a current account receivable balance of this amount. Credit sales for the year just ended were this amount. What is the receivable turnover? Okay, and then convert into day sales. Okay, and how long did it take on average for credit customers to pay off their accounts during the past year? So basically, you are calculating two information here only. First, you calculate the number of times first, and then convert into day sales. So how do you calculate the number of times? You use credit sales divided by receivables, the one that covered in the slides just now. Okay, and then once you get the numbers ready, remember this is the number of times. That means how often you collect the money from the people who owe you money. Okay, then after that we convert to day sales. How do you convert to day sales? You use 365 days divided by receivable turnover. Then you get 25.58. Okay, so that means that on average, okay, it takes about 26 days for you to collect the money back from the people who owe you money. Oh, everything squeezed here. Very hard to refer one. Okay, moving on. Wait. Okay, continue. Next question is very long already. Okay, next one is calculate market value ratio. Now, a lot of information here. First, Crabtree Incorporated had additions to retained earnings for the year just ended of this amount. The firm paid out this amount in cash dividends. Okay, so later on, roughly, we can know how much is the net income already, right? Because why? This is the addition to the retained earnings. Okay, this is the addition to retained earnings. And this is the dividends being paid out. So these two add up together, it becomes net income. Okay. So that's why the first part here, I calculated 755,000. Okay. Now, it has ending total equity of 7.2 million. If Crabtree Incorporated currently has 580,000 shares of common stock outstanding, the total shares, this is total shares. What are earning per share, dividend per share, and book value per share? Okay, we do the first three first. Okay, we do the first three components here first. Okay. Sorry. You do the first three components over here first. Calculate earning per share. How do you calculate earning per share? You use net income divided by total shares, right? Net income divided by total shares. So we got net income already from where? From the combination of additional to retained earnings plus dividends. Okay, we got a net income already. And then what is the shares outstanding? Total shares. Total share is how much here? Just now I mentioned is 580,000. Okay, put that in, you get EPS, earning per share. Okay, then you calculate dividend per share. Very easy. Actually, if you can remember all the formulas, it will be easy, lor. If you cannot remember formula, then it will be very hard, lor. Okay, so dividend per share, you use your cash dividends, your total dividends divided by total shares. Okay, total dividends is how much? 130,000. Here, highlight in yellow. Okay, shares outstanding means total shares. I repeat, shares outstanding means total shares. So what is the total shares? 180,000. So divided by each other, you get the answers, lor. 0.22 per share. It depends on how well you remember the formula, lor. Yeah. Okay, then what about book value per share? Okay, like the one that I covered in the slides just now. You use total equity divided by the shares outstanding. Okay, what is the total equity here? 7.2 million divided by total shares, which is 580,000. Divided by each other, you get the book value per share. Okay, the first three components. Okay, now you know the book value per share already. If I also tell you the share price, if the stock currently sell for 29 per share, please write that. Sell for 29 per share means price per share, PPS, or current share price. Okay, if I in exam they tell you, okay, the stocks is currently sold for 29 per share means what? Means the current share price, the price per share. So now can you calculate the market to book ratio? Can, because now you know the market share price already, divided by the book value per share that I've just calculated, then you get market to book ratio. Okay, and then after that, we can calculate the PE ratio as well. Okay, the PE ratio. And lastly, if the total sales were 10.5 million, what is the price sales ratio? So how do you calculate PE ratio? Because you got share price already, you use share price divided by earning per share. Okay, then you get this number, this PE ratio. Okay, and sales per share, you use the price to sales ratio. You first have to calculate sales per share first. Okay, sales per share, how do you calculate it? You use total sales divided by shares outstanding. Okay, so total sales they give you already, right, at the end of the sentence, and then divided by the total shares, you get the number here, sales per share. So once you get the sales per share, you can calculate price to sales ratio already. What is the price here? Price refers to the share price. Share price is my numerator, and the sales per share will be my denominator. And at the end, you get PS ratio of 1.6 times. So actually, basically everything is just using back the formula that we covered in the slides just now. So if you can really remember all the formulas well, then things will be faster a bit, or else it will be very difficult. Oh, can. So you can see this P ratio, 22.31 times means what? Means the investors are willing, okay, to pay 22 times higher, okay, for $1 of earnings from each share. Okay, so that means that if the P ratio is high, that means investors are actually expecting higher earnings growth in the future. Okay, they are willing to pay up to 22 times higher, okay, for the $1 of earnings per share. Make sure you know how to interpret P ratio because P ratio is needed for your assignments. P ratio, okay.
So normally this kind of question, how many marks each question?
Sorry, how many?
Normally this kind of question, like how many marks for each question?
On this. It depends. So far, it's only for terms. Significance and counter
Because like normally. Wait.
So far,
因为我他长这样问的，因为如果要这样问也是最好出一个 A，一个 A 这样，好像不了的啊，对吧？对，是在标准标准。
诶，那个
Okay, next question. Okay, let's have a look into next question. Okay, I will do some annotation as well. Okay, so let me share my screen on my iPad.
就是记完它 formula，
Exactly, it's all about formulas. Okay, so let's have a look into next question. See, next question is here because I want to do annotation here. Okay, next question is about internal growth. Okay, so we talk about internal growth. If that company has a 9% RA and a 12% payout ratio, okay, what is the internal growth rate? So what's the formula for internal growth rate again? So if you refer back to your formulas to the slides, okay, so that is the formula here on the right hand side there. Okay, so I can write, okay, internal growth rate equals to what? Equals to ROA times B, okay, as a proportion of 1 minus ROA times B. Okay, so this formula, where do I get it from? I get it from here. Okay. Now, so that is the formula. But first, we need to calculate what is the B first. Shh. B first. Okay, so first of all, in the question, it says that 12% payout ratio. Okay, 12% payout ratio. That means 12% is being paid out. Okay, so again, we mentioned that B here, okay, is the retained earnings, right? So the net income minus what is being paid out. Okay, so minus your payout ratio, okay, equals to 1 minus payout ratio is 12%, 0.12. Okay, make sure you convert it correctly. Okay, so 1 here means the full net income. The net income, a portion being paid out already, so I want to see how much is being retained. So B here is my retention ratio or retained earnings. Okay, so therefore 1 minus 0.12 is 0.88. Okay, 0.88. So therefore, I can substitute that into the formulas. RA is how much? 9%, right? So 9% is 0.09 times 0.88. Okay, 1 minus 0.09 times 0.88. Okay, try and calculate and see what answer do you get. So there's an answer for this question. You should be able to get 0.086. Okay, or you can convert it into percentage, which is 8.6%. Okay, so one conclusion I want you to remember is when B gets larger, when B gets larger, the whole denominator over here will get smaller. Okay, so therefore this overall becomes higher. So one conclusion we can make is the higher the retention ratio, the higher the internal growth rate. Yeah, use calculator. This one not only for FVPV only. Okay, so that's the answer for this question. Yeah. So that's the whole extra questions. Okay, let's have a look into the last question. Let's have a look into the last year DuPont identity. Have a look into your study guide. Okay, so the company has an ROA of 9% and 8% of profit margin. So you have ROA here already, okay, 8% profit margin, okay, and ROE of 14%. So it's like, okay, if you refer to this one, okay, if I look into DuPont identity, now what happened is I have been given ROA, I have been given profit margin, okay, and I have been given ROE as well, which I will use it later on. Okay, so ROE of 14%. What is the company's total asset turnover? So I can calculate this one, no? Clear or not? Yeah, so there's a first question. Okay, what is the equity multiplier? So later I want to calculate this as well. Okay, explain how DuPont identity indicate firm's profitability, asset utilization, efficiency, and leverage. Okay, that one, the last sentence is the theory questions. Basically, you just explain what is DuPont identity. So this one, you have two things to calculate. The first one is total asset turnover, and second one is equity multiplier. Okay, so try and do this. How will you do this? Use the DuPont identity. So we have just say that our A equals to profit margin times total asset turnover. Fair enough. Using the DuPont. So ROA is how much? 9%, which is 0.09. Profit margin 8%, 0.08. Then calculate total asset turnover. Okay, so move around. TAT equals to how much? 1.13 times Okay, and then using back the DuPont as DuPont identity as well, RE equals to, we know that it's about the first two are RA already, right? The first two components are RA times, what is the last one? Equity multiplier. Okay, so now what is the RE? 14%. RA 9%. So move around. Equity multiplier is 1.56 times. But make sure you know how to utilize the DuPont identity, the formula. So that's the answer for the last question. 真是打 finance 有意思啊。没有。Okay, once you are done, I have one extra question. Then once we are done with extra question, then we can call it a day. Yeah, this is not the last. Okay, so next week, next Thursday is holiday. So I try to replace on Wednesday. Then okay, think about it. See, Thursday, next Thursday is holiday. So you want to wake up at change to Wednesday only. Yeah, let's see.
跟你们吵架，不期而入，都给你。妈的！去家看片，我看我的100。3块本币呢，就是1300块，对，可以发。
我已经拿掉了，不用紧，it's okay, it's okay. Never mind, stop recording.
5块啊？
啊？
是这样的。
Then you ask someone for the answers, no? Okay, let's have a look into last question. Shh. Okay, last question, we are done. Okay, so tutorial, I have already covered all. So I will post this as well on Teams. Shh. Okay, let's look into one last question, okay? So all this done. So I will post it later on. Okay, last three. Here. We're trying to do the extra questions here. Equity multiplier, EM. Then you send me a WhatsApp and show on screen. Can. Yeah, that would be good. Wow, smart. Wait, try to do this way. Shh. Usually it's in midterms so midterms is multiple choice questions. So 做不出啊，这是来题，你还在研究那一题啊？哎呦，wait, try this one first. Okay, see I think can one Can do or not? 这三题哦。
3题啊，
哇
很多
，Can do or not?
我以为这个好像
你
应该没有变有点了，
跟令然后那个
对，
关掉，
要不哎，这个可以哦，可以裁的，
你要白给他，不是你上课，
可以
Wait, question A. Can get the answers or not? Total asset turnover.
不懂，
How do you calculate total asset turnover? 喂，不要玩嘞 Try to get the answers
这是
total sales 除以 total asset. Okay, but you don't have total assets. Shh. So how do you get total assets? Can use our AO. There are different methods for you to get the answers. Up to you. As long as we get the same answers, then correct already. Okay? Net income divided by total assets. Wait, make sure you get the answers though. RA is 12%. Net income 10 million. Okay, and we can calculate total assets here. So how much are total assets? 1, 2, how much? 1.2. 1.2. So 1.2 million. Okay, so then we can put it here already. Total sales is 100 million. Okay, divided by 1.2 million. Okay, so we can calculate this one. So try and see what you get for the first part, total asset turnover. Hey, total asset 1.2 man?
Sorry.
What?
Uh,
Oh, 1.2. Yeah. Okay. No worries. Total asset should be 83.33, right? Wow, 全部没有 calculator 的啊 OK
On the way. For the next.
Okay, next one is our equity multiplier. So we can use ROE equals to ROA times equity multiplier. So ROE is 15%. ROA is 12%. Okay, and we can calculate equity multiplier here. Okay, this one here total asset is 83.33, right?
Yes.
Okay. Okay, and then put it back here. Check, what do you get? You all really will do or not? So at the end you get 1.2 times. Okay, and this one, what do you get? 1.25 times. Okay, settle. Question A. Question B, easy. Net income of 1 million. Reinvestment back to business is 0.5 million means what? Means that you pump it back to a business. Addition to retained earnings. Okay, total share outstanding is 100,000. Compute dividend per share. Okay, so very simple. Net income is 1 million. Okay, and then addition to retained earning is 0.5. So if I want to find out the dividend payout, okay, so I just use 1 million minus 0.5 million. So that is the total dividends payout. So which is 0.5 million, which is the dividends being paid out. So if I want to calculate dividend per share, how do you calculate dividend per share? Your total dividends divided by the total share. So total dividends is 0.5 billion. Okay, and then outstanding is 100,000. So you change that into the figures 0.5 million. Change the number 0.5 million. That's just for a while. Okay, at the end, we should get $5 per share. Just now the 0.5 billion. Okay, so that's question B. This is question A. Okay, question C. Payout ratio 9%. ROA 12%. Compute internal growth rate. 9%. Do not later do not convert to decimal. This one. So try to do this. At least do one questions Okay, internal growth rate. So I write the formula first. Internal growth rate equals to A minus B 1 minus RA times B. So I want to calculate B first because I have PR ratio already. So how do I calculate B? 1 minus payout ratio. KR ratio is 9%, means 0.09. Do not convert wrongly. If you convert wrongly, everything goes wrong. Because I don't know why sometimes students convert wrongly for this one. So at the end, what do you get here? This one. 1 minus 0.09. Correct. Okay, so 0.91. So substitute that in. Where you all see everything looks easy, but try and do and see when you have time, when you do a revision. Okay, then put that into calculators. Tell me the answers. So what's the answer? So 0.12. Okay, so you can put it as 12% as well. Okay. You all can get the answers or not? Not sure. Yeah.
哎，我们这里有来了哈，大概他们家。
还是稳了。
还要维持上达。
那转到又跳起，我 AD KV 我这边都可以把手机。
哇！
来不那，来不，我讲这个肥佬可以做。你先讲这个是。
Okay, so let's point a D and let's the attendance and then your classmate had created a WhatsApp group. You may wait, hold on, let me stop sharing.